Good evening, friends. In front of you after some time, purely because slots are little tough. So I thought, let me come in front of you on Friday. Normally, I don't come in front of you on Friday, but today with some interesting data point. How do I see the market going forward? If you remember, I've been talking about that market should move up from here on, and that sentiment by Diwali should be a little different. We are seeing some sign of that, I think, happening in the market. But yet, the full impact is still not been of what is happening on the economic front is still not be visible. So we'll talk about that also. But before I begin my webinar, a small disclaimer that this webinar is just only to enhance your understanding about the equity market. It is for the education purpose. Please consult your financial advisor before buying or selling any stock. Number one. Number two, securities in investment market are subject to market risk, and past performance is no indicator of future returns. Now, let me start with the new debate that has come up. Quarterly result, which Trump has been saying should be done away with and should move back to the half-yearly result. I'll give you some color on that and also give you my personal opinion whether I don't know what US should do. Good luck to them. Let them do it. But sometimes we also try to follow something which the developed world is doing. And should we at all, and should we have a debate in India also, that should we have a half-yearly instead of quarterly results. So I'll give you some facts. I'll show you countries which follow quarterly as of now, countries that follows half-yearly as of now. And let me also tell you there are many countries even as on today follow once a year kind of a numbers. And then I'll give you my take what it should be. So just a background that in the US, this system of declaring quarterly result is as old as 1970. I again repeat 1970. That is almost now we are talking about 55 years old. And Trump wants to change that philosophy now. I don't know many people, but in the first term of presidency, Trump did mention about moving from quarterly to half yearly in 2018. And again he's repeating the same thing. Just to give some background, India introduced very late, almost 30 years after it was introduced in the US. We introduced in year 2000. While India introduced in 2000, there are some countries that moved back from quarterly to half yearly. Like for example, UK, I'm just talking about the prominent countries. In 2014, they moved from quarterly to half yearly. EU did something similar in 2013, and Singapore just removed the requirement only 5 years back in 2020. So here is the list of countries basically who follows quarterly, 6 monthly, and the annual numbers to be disclosed. And of course, it's not mandatory, but sometimes companies do declare numbers based on their comfort level. So you look at the quarterly part, country like United States, Canada, Japan, China, South Korea, Taiwan, Hong Kong, Brazil, Mexico, Saudi Arabia. Saudi Arabia is the only country within the Gulf region which declares quarterly. So you can see the list on the left hand side, very prominent name. But at the same time, what you see in the middle, that is the 6 months, also has a very prominent name. Country like Germany, UK, France, Italy, Spain, Australia, New Zealand, Singapore, Malaysia, South Africa. But as that's not sufficient, some people on the extreme also, the annual, Switzerland, Norway, Sweden, Denmark, Finland, UAE, Qatar, Kuwait, Chile, Argentina. So, the different countries are following different practice. There is no one thumb rule that it has to be quarterly, it has to be 6 months, and it has to be annual. Now, sometimes this kind of practice also comes from the sheer pressure coming in from the investors community. The basic philosophy right now in the whole world market is that better and the quicker information is good for the investors. Why it good for the investors? Because it reimposes the faith in the equity market. And if it reimposes the faith in the equity market, more money will come to the equity market and better the overall market would be. Now, I'm a little surprised and a little shocked. Why I'm saying so surprised and a little shocked? Because we are in the era where information impact the prices very significantly. The moment you move away from quarterly to 6 monthly, there is an opaqueness in the what we call the complete data system. Then how does the market knows what's happening in the company? And once you don't know what's happening in the company, what would happen when the numbers comes in the 6 months, the volatility in the market will become more pronounced. By declaring numbers in quarterly, that volatility getting reduced. Why? Because you are able to discount the numbers at very shorter interval. Another problem which will happen that there will be an arbitrage between the smart investors or the analysts or the fund managers and the retail investors like you. Why? Because fund manager and analysts do have an access to the corporate. Even in the quarterly result arena also, they do get lot of information from the fund from the company of what's happening. And by doing that, it's an injustice to the retail investors, which I believe should never happen. People like me will have an access to the management, but people like you will not have the access to the management. And I'm saying, despite having access, I'm saying that should not be the case. Another thing which I believe is that, India should take a lead actually. And it should take a lead in saying that allow companies to declare the top line, the monthly production and the sales number. Today in the world of technology, every company can make the balance sheet live. The software is available. When I was doing my CA, we used to do it manually. Computer भी नहीं था तभी तो. वो फिर हम लोग ट्रायल बैलेंस में वो टैली करते थे पैसा से पैसा. वो कैलकुलेटर में कट करते थे. अभी तो now तो everything so that in those days the accountant used to write in a ledger. लाल चोपड़ा होता था. I don't know how many people remember now that. वो खाता वही whatever you call it, debit and credit kind of stuff. So sometimes you are able to do credit, debit आप forget हो गए and the trial balance will not tally. Now in this world everything is automatic. Software would take care of that automatically. कितना debit करना कितना credit करता है. So today when the technology becomes so advanced, I don't see any reason why we need to go backward and going from quarterly to 6 monthly. India should take a lead. In fact, India is one of the has taken many leads in many ways actually. Like T+1 settlement or T+0 settlement. I think India is the first country or maybe the only country in the world to do that. Why can't India take a lead and say, now from quarterly, I want some key statistical data to come out monthly. Let investors, so that will reduce the volatility in the market. Otherwise, what is happening today? When company comes out with the quarterly numbers, the fluctuates happen very badly. If you go to 6 months, the fluctuation is very, very bad. And investors don't like the fluctuation. There are a lot of companies voluntarily disclose what has been the production number and the sales number. We have seen that in auto companies. We have seen in some of the cement companies. We have seen some that in some of these broking companies disclosing how many clients have added and so on and so forth. Instead of making it on a whims and fancy of the company, make it mandatory. More the information, better the information, and when the market become more transparent, it will attract more investors, and that has been the historical trend has been. So this is my personal opinion. I am strongly of the opinion that instead of while the Trump is talking about from 3 months to 6 months, India should basically flip the position and say, why quarterly also? Why not monthly? Let be the first country in the world to do that. And I think that's the way we should take. So the leadership doesn't come by following others. Leadership comes when you take your own path. And I believe India should do it, come what may. I hope if anyone from the CB is listening to this webinar, I think they should at least take this on the discussion table. Along with the exchanges, along with the corporates, take the feedback and should implement it. I think if you are able to do that, I think we'll set a gold standard for others to follow. This is my, of course, if you don't agree with me, we will open the floor for question answer, and feel free to ask me if you don't agree with my view. Coming back to, we all know that finally Fed did the 25 bips rate cut. So what happens to the market when they do the rate cuts? Does the market go up, go down? Is it good for the market, bad for the market? Because the logic says that when the Fed has cut the rate, the market should do well, right? That's what the assumption is. Is it really happening? But sometimes the assumptions and the realities are little different. But before we talk about that, how Jerome Powell is looking at the US economy? Is he gung-ho about the economy? How does he see the employment data? How does he see the inflation data? What is the growth rate that he's seeing? Let me give you. And what I'm going to say right now is an verbatim of what Jerome Powell made a speech during the press conference. That's his opening remarks is like this. Of course, these are only excerpts. I have not taken everything. While the unemployment rate remains low, it has edged up. Okay? And downside risks to the employment have risen. And at the same time, he says inflation has risen recently and remains somewhat elevated. So what is he saying? The reason why he did 25 bips rate cut purely because unemployment data is little deteriorating. And inflation, even though it's moving up, he said, I choose to ignore the inflation data. Why? Because for me right now, employment data is more important. What he also says that economic activity in the US has moderated and the GDP has grown only at 1.5% in the first half of the current year as compared to 2.5%. And why this moderation happened? Because slowdown in the consumer spending. But not only there is a slowdown in the consumer spending, there is also a slowdown in the housing activity. That clearly gives an idea that the tariff is making an impact on the economy, even though Trump may not agree with this statement. Now, if you look at very interestingly in the summary of economic projections, okay, the data it says is that the GDP of US will grow at 1.6% this year, that is 2025 calendar year, and 1.8% in calendar year 2026. What does this mean? It means that US economy will grow less than 2% at least next 2 years. And there is a high probability this data can revise downward. Why? Purely because of tariff uncertainty, which does not give a great comfort level. When your consumer spending comes down, when your housing sector remains weak, I think it does create some amount of uncertainty. And that could be one of the reason I think Fed would have decided to do 25 bips rate cut to stimulate the economy. Uh, while Jerome Powell do believe that higher tariff could be a very temporary kind of a one-time kind of a shift in the price level, but he also mentions later that it is possible that inflationary effects could be more persistent. So he's also not very sure what is going to happen. He does admit the situations are challenging. Why is he saying challenging? Because risk to inflation are tilted to the upside and the risk to the employment to the downside. It's a very tricky situation that we are into. That's what the Jerome Powell is saying. Now let's look at what happens to the market as and when the Fed did cut in the past, because we can always learn from the what happened in the past, and maybe we can take some conclusion based on that. So if you look at it, the market has gone nowhere, whether it's an S&P 500, Nasdaq 100 or Dow Jones. It has post rate cut, the market has not jumped so much. Okay, so it's not that market is on the fire when the rate cut happens. And what you see the numbers is from one rate cut to another rate cut cycle. Okay, for example, 0.88 is nothing but a difference between 31st July 2019 to 18 July 2019. The S&P 500 moved up 0.88. So from one rate cut to another rate cut. Same way Nasdaq 0.51 and so on and so forth. But having said that, Indian market do go down as and when the Fed did the rate cut. That the data suggests that historically Indian market did not perform well. Logically, it should do well. Why? Because the FPI should basically take money out from the US market. Why? Because the risk-free return comes down. And when the risk-free returns comes down, you want to take a more risk-on strategy to generate alpha on the portfolio. But that's not been. So sometimes, logic says this, but reality happens something different. This one data, I was looking at it. And of course, I presented the data to our PMS customer yesterday. When I look at the trailing 12 months price to earning of US versus India, US is commanding at a premium. An economy which is growing at 1.5% is commanding higher price to earning. Doesn't make logical sense. As I've been, I don't know whether I presented data with you, but of course I did present this data maybe to a previous customer. The more and more increase in the market cap, the gain is coming by tech sectors. And within tech, the Magnificent Seven, which has been the driving force for this one. The rally in the US is not broad-based. But coming back to this price to earning, the US is commanding a rich valuations compared to the Indian market. Most of the time, Indian markets command a rich valuation because of growth potential and so on and so forth. But you look at this data. In FY 2027, that is the next year, financial year, the estimated EPS growth is 18.2 for Nifty 50. On that 18.20, we will have another growth of about 15%. Assume that there is no change in the price to earning of the Indian equity market. We can still expect 36% return in next 2 years. Again, I repeat, no change in the price to earning. But having said that, let's look at the price to earning. If you look at the last 10-year average of forward P of Nifty 50 is at 20.7. Today it is at 20.64. In other words, despite higher teens growth which I expected, the market is commanding a low P than what it used to command in the last 10 years. So there are two things which can happen. First assumption is that there is no growth, there is no expansion of price to earning, but since the Nifty 50 earnings will grow, we can see 36% growth. Now, you add a multiplier to that, and hence you say, no, not only the growth in earnings would be there would be expansion of price to earning also. And if that happens, you can understand what can happen to the market. So, the risk-reward ratio from this point onwards has been extremely positive for the Indian equity market. I know many of you basically may be excited because US market did very well. Let me put my money there. That's a classical case of a recency bias. I would not be very comfortable doing that. So my request to all of you is that please, please, please look at Indian equity market in a very different perspective, and you will basically see that we can make money, good amount of money on that. Kahan gaye? There was a very famous serial. I think when I was in college or school, I can't remember. Kahan gaye wo log? I'm saying kahan gaye wo investors? Look at this data, very interesting data point. Total demat in March 2020 were 3.1 crore, of which 91 lakhs were active. In other words, 29% of accounts were active. And March 2020 I can understand because the sentiment is really bad actually. What is the definition of active accounts? Active investors are those investors who traded at least once in a year. साल में एक बार किया तो भी वो एक्टिव बन जाता है, which is too low, but anyway, let's assume that. This number kept on increasing. Why? Because the market did well. 3.14, 5.9, 7.2, 7, 9.16, 11.2, 11.9 as of August 2025. In other words, we added near about 9 crore new demat account. But वो 9 crore का 9 crore तो नए investors थे. And most probably they would have all made good amount of money. Why? Because the market did extremely well from 2020 to August 2025. Despite last 1 year, market going nowhere. But here those investors have gone away. I don't know where. Why? Because the number of active investors is only 3.57. That means the 8.33 crore investors are inactive. That is 70% are inactive. Now, why? What is important for this? Sometimes you are inactive because you did not make money. You are inactive because you lost interest in the market. You are inactive because you did not, you are too busy or you in your other life. And sometimes the market sentiment also decides कि नहीं कुछ नहीं करना है. But the moment market sentiment revives, the same investor who have been dormant become active. Now, if you look at the trend, in March 2021, 38% were active, which increased in March 2000 to 46. Then market did not do well in 2000, so March 2000, 34%. March 2000, 34%. March 2025, 33%, which was again not a very, in August 2000, only 30%. Imagine this 30 becomes 40%. What does this mean? In other words, almost 1 crore investors will become more active than what they are right now, which will create liquidity in the system, and liquidity in the system can push the markets high. Very quickly, and then we'll open the floor for question answer. Overall, India has received a good monsoon. Having said that good monsoon, there is a little two data points I wanted to harp on. Northwest India 32%, because those who are in the north have seen a fury of excess rain, and those who are in the east and northeast India, they have seen deficit rain of near about 18%, and overall India as a whole is 8%. Now if you look at the sowing, it's 1.4% only higher. When I came in front of you last time, it must be very closer to 3%. So you can see that the initial estimate is that the food grain production would be higher than what it was there last year, but only 2.5%. Of course, this number can get revised upward or downward based on how the monsoon season plays out. Normally, monsoon ends by 30th September every year. So we are almost at the fang end of the what we call monsoon season, southwest monsoon season. We'll wait and see what happens there. Market this week has been clearly green, green, green. Almost each and every indices are in the green except FMCG, which is down by 0.5 despite GST cut, which will kick in from Monday. But there is one more thing which is happening. You look at the realty index, which is up by 4.43. You look at small cap doing better than the mid cap, and the mid cap doing better than the Sensex and the Nifty. What does this mean? Sorry, I made a mistake. There is a heading error. Markets have been down this week, so that's a wrong heading. Market has been up this week. I apologize for this. So there is a risk-on strategy which is there in the market. The realty index is up, small cap index is that gives an idea that people have become more and more active in this market. There is a risk-on strategy. When there is a risk-on strategy, market normally does better this one. YTD, not much change, but auto you can see on the top, followed by the metal, and then the PSU bank, and then the Nifty finance. So banking and BFSI as a segment did well, but within the BFSI segment, I think PSU bank did better than the private sector bank. FPI have been seller in the market, but the intensity of or the speed at which they were selling has come down. It's only 7,942 crore sale. But having said that, they continue to remain net seller to the tune of 1.39 lakh crore in 2025. Now, you know that I have predicted that FPI will be positive anywhere between 50,000 to 1 lakh crore in 2025. Assume that even if they have to bid the lower end of my prediction, in next 3 months they should put in about 1.89 lakh crore in their market, which works out to near about 60,000 crore every month. Doesn't look very easy. So I don't think, most probably my prediction of FPI putting in 50,000 to 1 lakh crore seems to be not hitting the bullseye. So I think let's wait and watch. Today, as you may be aware, that the data has come on a direct tax collection. So I thought, let me put it. I just put this data just before coming for this webinar. So first, look at FY 2024 and 25 kind numbers actually, and you can see that's the corporate tax 4.9. I think I made a mistake. I think it should be FY 2024 and 25. I think looks like, yes. I was making an arrest actually. 4.9 growth in corporate tax, non-corporate tax 13.7, and overall 9.1. But when you look at the advanced tax for this financial year till 17 September, the corporate tax is up by 6.1%. The non-corporate down is by 7.3%, taking overall to 2.9%. Now, the reason why this is very critical for us to understand that normally the non-corporate is higher than the corporate. Am I right? So, if the corporate is up by 6.5%, which is a smaller portion, and non-corporate down by 7.1%, logically this number should have been down in advanced tax collection, isn't it? So, if there is no buoyancy that we can see in non-corporate, probability is very, very high that India may miss near about 10.5% corporate tax. If my memory serves me, non-corporate में growth expectation था. That will remain undershoot. And with GST collection coming in, rebate coming in, it can create a further headwinds for the government to meet the fiscal deficit. My request to the government is as follows. Please spell out, how are you going to manage the fiscal deficit? For some reason, you are saying that we will not be able to meet the fiscal deficit. Say so. Till now, the stand has been that there will not be any compromise on the capital expenditure. They have been saying there is no compromise on the fiscal deficit. They will maintain the glide path that they've talked about. If that is so, how are you going to fund the tax foregone in direct tax and non-direct tax? And I think that's a one critical question that government must reply. Earlier the better, because why? That will reinstill the confidence in India's economy strength. Very quickly, market outlook. So, last few months, there have been a lot of positive things happening. India's rating got improved. No impact on the market. 100 bps rate cut has happened, no impact on the market. When I say no impact, no major impact. 1 lakh crore tax foregone. Anyone having an income of 12 crore and less don't have to pay any income tax. No impact. GST rationalization, which is going to kick in from Monday, no impact. India Inc. is saying that we will grow much better in the second half of this financial year. No impact. How long this will happen, I don't know. It's like a spring that you are pressing. Beyond a point, you will not be able to press, and it will retaliate. Indian market is something like this. So those who are sitting on the fence, my request to them, please increase allocation to the equity, and you will be much better off. With this, let's open the floor. Thank you for your time and attention. Venkateswara sir, greetings Sunil ji. As you know, based on your IP, the ratings of the stocks keep changing frequently. In my personal portfolio, if the ratings of a particular stock goes up to strong buy, can I buy more of the stock? Please reply. Of course, sir, you can buy. There is nothing wrong with that. If it is there, the only request to all of you, number one, remember that when you buy, do not increase allocation to one particular company more than 10%. Number two, your overall sectoral exposure should not go more than 30%. That's the two conditions you need to satisfy. Otherwise, you will basically make your portfolio a little risky. So yes, please go ahead and buy, provided you are not breaching 10% individual company limit and 30% sectoral limit. Isaki Jas say, hi team, our portfolio optimizer monitors your stocks 35% gives a buy sell trim calls to improve your returns. Could you please advise, is this feature come with the cost of free for premium user? It's a free for the premium user. You don't have to pay anything for the portfolio optimizer extra. If you have subscribed to the product, it is a part of the package only. That's what my understanding is. But what you should do, you should always write to support@marketsmojo.com, and they will respond. To the best of my understanding, I think it comes free with the package. Suhas, sir, after recent Fed rate cut, gold prices have corrected from the record highs. However, as long as China continues to be large-scale buying, prices may remain supportive or even more higher. In this context, do you feel that the allocation to gold and photos should still be increased? Suhas, Pune. So the logic says that when that's why I don't know. Sometimes what logically should happen doesn't happen in real life. The hypothesis is that when the Fed reduces the rate of interest, gold becomes more attractive. Why? Because gold doesn't earn any interest, but Fed Treasury will do earn interest, and that now it becomes less attractive because rates have come down. And logically, gold should go up. The central bank across the world has been buying gold in a large quantity. Investors like you and me also buying through ETF. So should gold go up? Suhas sir, I don't know whether you attended my webinar, but I keep saying that probability of gold going up from this level is low. Why am I saying so? It run up too quick, too fast. And hence there could be a time correction, there could be a price correction in gold. I know I'm a little contra, and many of you will not like it because you are a little bullish on gold, but I don't think so. If you remember, I had come in front of you on 30th April, there was a Akshay Tritiya, and I said that I did buy gold as a sukan kind of a stuff, but I did buy more of a silver at that point of time. The reason was very simple, because I don't expect a rally in the gold, and I'm always will advise you what I'm comfortable doing on my personal portfolio. So upside from this is little low. Now you ask a very pertinent question: should the allocation of the gold, should I increase? Answer is no. On the contrary, because market did not do well, gold did very well, silver did very well. Now because of that, allocation to the gold has increased. It's a right time to trim it down or bring it to 15%. The money that comes, you put that money into equity to make, remember, never ever try to, see, ultimately gold is a commodity, whether we like it or not. And if that is so, it will have its own up cycle and down cycle. And in that sense, don't go over. Never ever in a life, when the whole world says this is going to happen, the probability of that happening is very, very low. Why? Because all good things are priced in. And if this is priced in, it leaves little scope for price to go up. So I would not recommend Suhas, sir. Namdari sir, what is your view on the auto sector now? Are valuation price in? Most of the expected growth is still enough headroom exists to make money from the current levels. So Namdari sir, we do own two leading auto companies, two-wheeler companies in our portfolio, in our PMS portfolio I'm talking about. And our IP does gives an indication that there is still scope for them to move further up. GST cut, and I've been informed that there will be a queue outside auto dealers on 22nd September. Number one, the Navratri begins, which is an auspicious time. So normally during Navratri time, during Dasera, the sales of auto is anyway higher. But this time, the 22nd September, that's a Navratri, also comes in with the big GST relief. So those who have held back the buying of two-wheeler, four-wheeler and so on and so forth, from 15th August when the Prime Minister Modi made an announcement, I think that pent-up demand is going to be there, and that's going to get reflected. So what my request is, Namdari sir, as of now, we are extremely bullish on the auto as a sector, number one. And whether this bullishness is justified or not justified, we should look at the number that they declared on the 1st of October. Because a lot of companies will give an idea what happened, because the Navratri will end on 2nd October, because Dasara is on 2nd October. So वो पता चलेगा नवरात्रि के 9 दिन में क्या हुआ है, and whether the GST really helped. My sense is that the numbers would be very, very good. Yes. Satish sir is saying, what is your view on the auto components and ancillary stocks? If auto does well, auto and auto ancillary should also do well, sir, isn't it? It's a very quite natural. So auto ancillary has a two business model. One is that supply to OEM. If OEMs do well, they will do. And second thing, the replacement market. And if you listen to many of the commentaries of of the auto ancillary companies, they're saying the replacement market is quite strong. So I think logically they should do well. Tahil, the fertilizer pack is not performing recently as compared to the other stocks, auto etc. What is do you expect in the future? So I think it's a market rule, am I right? Okay, what goes up normally comes down, and vice versa. So many of the fertilizer companies have gone up significantly. And hence there is a correction. And second thing, there was a fear of China restricting the supply. There could be a shortage of fertilizer, which I think India and China relations are warming up. So that fear is also gone down, and that's the reason why fertilizer stocks have little corrected. We even company specific, we did move out of one fertilizer stock in our PMS, but we continue to hold the other one. Why? Because we believe that companies should do well. So right now our view has to be company specific rather than across the board. Badrinayan sir, with GST declaring monthly sales figures should be mandatory. Company simply has to give GST figures file. So it's a good suggestion. But sir, क्या होता है GST में sometimes what happens, you have a refund, you have a sales coming back and so on and so forth. It could be a little challenge. What company can at least do is that at least can give production and the sales number. Okay, I think that makes a lot of sense, for the individual investors to basically make a sense whether production is increasing, whether sales is increasing, and then you can take a very measured view. But that's a good suggestion, Badrinaran sir. Sanclub filing of various posts in the national company law appellate level and on deputation basis. Filling of various. Sir, so what is it a statement or it's a question, sir? I don't know. Let's move on. Dhaval sir, please, you and Mohit try to come often as much as possible. We really miss you both. Dhaval sir, so Mohit is traveling, that's why he's not in front of you. Otherwise, normally Mohit is in front of you with our Infinity product. He has been traveling for last 1.5 months. He's in US. He's returning back from the US, I think, on tomorrow or day after tomorrow. And then he's in Dubai for some days. What's happening? Why am I okay? And then I think in the first week of October, I think he should be in front of you. The world is not that we don't want to come in front of you. It's only that we don't have a slides. क्या हो रहा है? Why is blink this one? हो रहा है बराबर? Okay, यहाँ पे मेरा वो हो रहा है. Okay, so it's not that I don't want to come. It's Mohit doesn't want to come. It's just that slots are not available. I'm in front of a customer every Thursday, sir. Dhaval sir. So every Thursday, because that Thursday is a slot booked for PMS customer. On Monday we have stock of the week. Then in the evening there is no one available. On Tuesday we have Mojo 1. On Wednesday we have Infinity. Thursday I'm with PMS customer. And Friday sometimes we have some other events like stock of the month or something which doesn't give me. Today the slot was free and hence I came. But point taken, sir. We'll see that how often we can come in front of you. Tushar Kondra said, how can we get Nifty earnings to track? Also, what will be the earnings if we remove Zomato and Eternal, Max Healthcare and other 100p stocks? Also, how one could justify Max Healthcare? Is it a long-term play for it to be Nifty? Question is not a stock speculation, but ask as a student of market. Sir, आपने कुछ भी कान ऐसे पकड़े कान ऐसे पकड़े हो जवाब तो वही होने वाला है. So I don't know, sir. What would be the if I remove? And see, I'm not in the business of removing one company, other company. At some point of time, some company would be commanding a very astronomical valuations, and hence you look at the data in a pure form. In the sense, उसको ये निकाल दो, उसको वो निकाल के data करना. I'm not a very big fan of that, so I wouldn't basically do that. But it's a good question that if you remove certain companies within Nifty 50, then where do we? What I will do maybe next time when I come, I'll give you the Nifty 50, what kind of PE they are. So, how many companies are between 0 to 10, 10 to 15, 15 to 20, that kind of a bucket I will come. बस मुझे याद दिला जाना ये. Okay? So, we can do that and we can give you an idea what percentage of market it's trading at what this one. So, that will give you an idea. See, ultimately, the market cap is a free float market cap. So, and these companies are, even though like company like Zomato would be 3 lakh crore, but still it's a small as compared to, because Nifty 50 market cap would be never 200 lakh crore. तो उसमें 3 लाख crore is not going to make move the needle so much kind of a stuff. So that's one. Where do we get that Nifty earnings to track? How can we get Nifty earnings to track? So we do have a screener in our website where you select the companies and Nifty 50 as a company, and you should be able to do that. In case we are not able to do that, please ask this question to Jason, and he will show you where on our website you can see that data to search. So normally Monday there is no question being taken on a stock of the week, but Tuesday the forum is open for question answer with Jason. Please ask him and he'll be able to do that. And no view on Max Healthcare. I know you can ask me in any form. I'm not going to respond to that. Sir, मेरा नौकरी चला जाएगा because my compliance has strictly advised me not to talk company specific. J. Muthu Subramaniam, I already model portfolio running. If I want to invest more, is it good to add in the existing portfolio or make a new model portfolio? So Muthu sir, this question has come time and again. I always say, please add in the existing portfolio. Why I'm saying so? If you create, and I'll explain it logically. If you create another model portfolio, probability very high that you will have a new set of stocks coming in, and hence number of stocks in the portfolio become too big. So क्या होगा? The law of average will come in. Second thing, आपको दो मॉडल पोर्टफोलियो को प्रोटेक्ट करना पड़ेगा. Why do you want to do that? Existing model portfolio डाल दो. That's a best thing. So you can track your performance. You don't have to look at two model portfolios to understand what have you made money. Now you know the biggest dilemma you will have. One model portfolio made 25% return. Other model portfolio made -10% return. अभी आप पूछोगे मैं कितना रिटर्न कितना बना, आपको पता ही नहीं चलेगा. Why? Because both have started at different point of time. So the best way you add in the existing. So you also know where do you stand, whether your portfolio is making money, not making money for you, and so on and so forth. Second part of the question: what is the best way to invest in gold? Is it gold ETF? Yes. There is no other option but the gold ETF. 1 to 10 gold ETF. गलती से भी गोल्ड कॉइन मत लेना, गलती से भी ज्वेलरी मत लेना. Please invest in gold ETF. Okay. In a time frame of 1 or 2 years, is there a more upside gold and silver expected? Okay. So gold and silver should always be part of your assets allocation. And what should be the percentage? 10 to 15%. I don't expect further upside from gold, but silver can go up. But will that silver price will also be as good as what we have seen in first 9 months of calendar year 2025? The answer is no. Even the silver returns will get little muted. But so do not take exposure to gold or silver because you are bullish or bearish on the company, on that commodity. You should look at the assets allocation. And within assets allocation, you try to play within 10 to 15 a bracket to see that you create wealth on this. So which reduces the risk to the overall portfolio. I don't expect major rally in gold, silver, maybe little, but not as good as what we have seen in last 9 months. Rakesh sir is saying, what is the situation in rural area? It seems that the consumption growth is not related to increase in income, but reduction in goods inflation. What is your perspective? How will it affect Dabur or Marico? Sir, no company specific. Let me give you the idea. What is situation in the rural India? I think the rural India, there are a couple of things. MSP is higher. The crop would be near about 2.5% higher than what the last year. So you will get better income. And when the rural has an agri income better, normally the rural economy does very well. Second thing, rural economy is more price sensitive as compared to the urban economy. वहाँ पे वो 5 रुपये का पैकेट और 1 रुपये का चॉकलेट्स आर मोर प्राइस सेंसिटिव एज कम्पेयर टू अर्बन इंडिया. वहाँ पे सैचे ज़्यादा चलता है, बॉटल कम चलता है शैम्पू का. हेयर ऑयल का वहाँ पे सेचे ज़्यादा चलता है, वो कम होता है. तो इट्स ए वेरी प्राइस सेंसिटिव segment. When the GST get reduced, it reduces the price. And the customer who was basically doing down trading or going to the organized market will move to the organized market, because उसके बजट में भी वो चीज़ आ रही है. और उसके बजट में आता बोलता मैं क्यों नहीं लूँ उस प्रोडक्ट को फिर. Are you getting my point? It's like if you're traveling by economy class and then you realize that business class is available, maybe with 1,000 rupees extra, even though you have to pay 1,000 extra, you may jump for it. Am I right? Something similar will happen. So I strongly feel the GST reduction will help organized players to a great extent. Why? Because the market will shift from the unorganized to the organized. And that's going to be a big beneficiary for the listed players. And you are saying consumption growth is not related to increase in income but reduction in good inflation. Sir, don't look at the data in an isolation. Both has its own play and role to play. The income goes up, allow me to consume more of the same product. Am I right? So previously you were consuming cheese or butter maybe once in a month because your income was not permitting. If your income goes up, maybe you consume twice or thrice. I'm just giving an example. That kind of stuff. Your previously, if your income was less, you were consuming a bath soap which should cost you 25 rupees. The moment your income goes up, instead of 25 rupees, you will upgrade and say, okay, now I can afford 30 rupees ka bath soap. I'll do that. So in the value terms, the company gets this one. And goods inflation remaining benign is always a good thing. Why? Because it reduces the pressure on the prices. The FMC companies will basically help them to can maintain the prices low, which can help. So I think both is a role to play. Dabur and Melco, please go to our MarketsMojo website. Based on the score, based on the recommendation, please take a call. Said sir, lots of IPO, lots of companies splitting their shares. Is India trying to increase supply and market bull run and make a bull market? Your thought? So the historical trend suggests that when there is a more paper coming into the market is not a good sign. Why? Because it's unnecessarily suck away the liquidity from the system. But that's the reality, because normally when sentiments are good, more IPO, and when sentiments are bad, less IPO kind of stuff. So normally many IPOs are not good for the market, and when I look at some of these IPOs, the quality of the IPOs are very, very poor. They have been able to subscribe purely because people are looking only at the listing gains and basically want to make a killing kind of it. I think the whole sentiment has been that invest karo, paisa mila, chhod do kind of stuff. So is the Indian trying to increase the supply? The answer is definitely yes, no doubt about it. They're trying to increase the supply and make a bull market. I don't think that's a bull market, it's a bear market, because more you become greedy, it basically pick the market. The good thing which is going to happen in the market is that there are a lot of positive things which have been done by the government. Even I forgot to mention the CRR cut, which is also going to permit a lot of liquidity into the system. So I think things are looking good. So yes, it's a bull market, but not because of a lot of IPOs or companies are splitting the shares. Krishna Raj, when you move shares to buy with score 70 or more, is it the best time to buy? Sunil sir, Krishna. When you move shares to buy with score 70 or more, is it the best time to buy? Definitely yes, sir. That's the reason why the score is buy. The recommendation is buy. Definitely, you should go ahead and buy. So, as a strategy, what should be your order of preference of buying? First, buy Mojo stocks. If you don't like anything, buy the score with the highest score. And that's how you should build your order of preference. So, first preference, even though sometimes so there is one company which is 75, for example, but not a Mojo score, Mojo stock. There is another company which has score of 72, but a Mojo stock. I would prefer to buy a Mojo stroke. But assume that both are not a Mojo stroke. Then go with the company which is a 75 score. Rishabh sir, very good evening. Thank you for guiding us. What is your view on IT sector regarding AI, US economy? Are mid-cap companies better, but they have high valuation? Please guide. Thank you in advance. So, Rishabh sir, I think this AI is still a very evolving and very. There are two school of thoughts. One school of thoughts believe that uh, there is no return on equity, there is no return on investment in AI till now, and hence, is this a right way to spend on AI? Second thing, there is a concern about what happens if Trump decides to do something to make America great again. So that's a concern. We shared some data with you that what's happening with the US economy. Consumption is slowing down, the construction activity is slowing down, economy grew only at 1.5%, which are not very good sign for the Indian IT software companies. Why? Because the budgets do get impacted. And AI, so I think the whole question that and I must tell you that the company, those who will survive and thrive in IT software companies are those who are able to make a use case of AI. And due to that, we will see the leadership changing within the AI space, in the IT software space, because some are as not as quick or as not as agile as others are in terms of adopting AI. But whether we like it or not, AI is the future. AI will do so many things which our brain is not able to even think as we speak. जो impossible लगा है वो AI will be able to do that, and that's going to reduce the opportunity for the IT software companies. So there could be a little bump and then it will come down. Why? Because what I was able to do with this software guy, the 5 people working on the same project, maybe one person is able to do with a lesser time and deliver better quality product to me. Am I right? So I'm not very sure the IT as a segment right now, one should look forward for investment. I don't think it's going to create a lot of wealth for the investors, to stay away. Another part of your question is mid-cap companies are better than the, even though better despite high valuation. I don't know, sir. It has to be little company specific. AI seems to be the, so I'll give you a thumb rule when you want to invest in what we call IT software companies. Look at the commentary and what they are doing on the AI front. And if you're convinced that what they are doing is right, please go ahead and buy that company. That companies would eventually will make a lot of money for you. The company, those who are little skeptical about AI and giving you some excuse here and there, please avoid that company, whether it's a large IT software companies or mid IT software companies. D.V. Raj Prasad sir, since you said investment in gold to be costly, do you think silver is underpriced and good to invest? No, sir, I said you are right. Gold is look little cautious, but silver is not underpriced. Having said that, between gold and silver, silver should do better. But should we expect the same kind of return that we made in last 9 months? Answer is no. So yes, it will go up, but not at the same pace it has gone up in last 9 months. Again, I request all of you, please look at gold and silver as a part of your assets allocation. And that asset allocation should be 10 to 15% of your total net worth. उस मैट्रिक्स को डाल दो and then you should be fine. How many more questions, Basir? 10, 12. Okay, we will take last 5 because almost 4 past 8. Last 5 questions, Basir. Ravindra sir, is it a good strategy to invest in companies which have low capital and high accumulated reserves, expecting a bonus issue in the current year or next? Do you have any view on this, Sunil sir? So Ravindra sir, I will never ever in my life will buy a company which is about to declare bonus. It's like you going to a bank, वो 500 का नोट देके आपको 100 का 5 नोट देता है बैंकर. You feel happy that you have 5 notes, but बाबा वैल्यू तो 500 रुपये ही है ना. Bonus is very similar. And in fact, I did many webinars during COVID time. Should you get excited with dividend yield stocks? Should you get excited with bonus and so on and so forth? Your reason to buy a company should never be a function of bonus sales. Your reason to buy a company should be the growth potential that company has to create wealth. There are many Indian companies who have never declared bonus but created huge wealth. I don't know last time when did the Warren Buffett declare bonus? But look at the kind of wealth he has created for the investors. So, and this is the biggest fallacy Indian investors make. अरे बोनस डिक्लेयर कराए, अरे बाबा वो तो किसी बच्चे को समझाने वाली बात है कि बच्चा 500 का नोट लेके बैंक में गया, कैशियर ने 500 का नोट लिया, 100 का 5 नोट लेके आ गया, अरे दैट पर्सन इज फीलिंग वेरी हैप्पी. और यू वेंट टू ए पिज़्ज़ा स्टोर, एक को उसने अक्खा पिज़्ज़ा दिया, दूसरे को उसने काट के पिज़्ज़ा दिया, एंड देयर आर सो मेनी स्लाइसेस. द गाय विद द स्लाइसेस फीलिंग मोर हैप्पी कि मेरे पास बहुत सारी स्लाइसेस है, उसके पास एक ही स्लाइस है. Bonus should never be the reason for you to invest in the company, Ravindra sir. And this is not only a message to you, but everyone those who are attending this webinar. अजय भाई बसिल मैंने बोला है भाई, कंपनी स्पेसिफिक सवाल ही मत सर. विच इज़ द प्लीज ओके रिपीट दैट एक बार. अभी उन्होंने पूछा भी ले लिया तो ले लेते, अब बस ले लो वो सवाल. अजय सर, विच इज़ द बेस्ट सेट टू बाय इन्वेस्टमेंट राइट नाउ? गो टू मार्केट्स मोजो वेबसाइट, वहाँ पे मोजो स्टॉक का लिस्ट लगा हुआ है. वी डिक्लेयर स्टॉक ऑफ द मंथ एवरी मंथ, वी डिक्लेयर स्टॉक ऑफ द वीक एवरी मंडे. वो ले लीजिए. व्हाई आर यू आस्किंग मी? अगेन इनका सवाल लिया. प्लीज योर फीडबैक ऑन सेमीकंडक्टर इंडस्ट्री, इज इट गोइंग टू बी द नेक्स्ट बिग इन्वेस्टमेंट अपॉर्चुनिटी? If so, any particular company? Sir, it's going to be a big opportunity, no doubt about it. Which particular company? I'm not very sure, sir. We don't own anything in our PMS. I don't own anything in my personal portfolio also. I don't know, because this industry calls for a lot of heavy investment, number one. Number two, use technological changes. So we need to wait and watch. But right now, I have not been able to study any of this. Last two more questions. 2 or 3? 2, okay. Sunil call, happy to see you again to enrich us. Please suggest, can we again invest in silver within over a limit of 15% as you well? More bullish on silver than gold. Regards. Yes, sir. As long as your 15% limit is there, please do so. And do so more in a SIP format than the lump sum. That's what my advice would be in silver. Jayant, namaste. Thanks for your insight. Do you think the price increase in silver is also priced in, and one should reduce allocation, or silver is also used in various? Okay, sir. I think I've answered that question when Sunil called, sir, asked me. I don't think it's fully priced in. There is a scope for further capital appreciation, not as much as what we have seen in the first 9 months. But please look it as a part of your assets allocation rather than having a view on the price of silver. I think there will be more questions, I do understand, but I don't want to make everyone late. I know it's a dinner time. It's again a weekend, Friday night, so you would have other engagement also. Thanks a lot everyone taking time out and attending this webinar. Hopefully see you next week. Good night, take care, and wish you happy Navratri well in advance.